Okay, good morning. Today is Monday, March 29th, and it is great to be back here with you again. If you're connected with me on Facebook or Instagram, you know that I was in Florida last week with my family for spring break. We had just a great time together. So thanks for letting me have last Monday off. Of course, anytime you take time off, there's always a lot to catch up on, which is absolutely the case here today. So let's go ahead and dive right in. For those of you who are joining me here for the very first time, my goal with these Monday videos is to help you make your next financial decision and the one after that a good one. You see, the secret to prosperity is not by winning the lottery, not coming up with the next great idea, or any one thing. Sure, those things can happen, but the real secret to prosperity is in the next decision you make and then the one after that. So that's my goal here, to help you make your next financial decision and the one after that a good one. So in that effort today, we're going to start with a couple of housekeeping items. Then we're going to look at what happened in the markets last week. And then I'm going to talk a little bit about investing during periods of inflation. So 2 weeks ago, I reminded you that tax filing season was, the deadline was just a month away. Well, in case you missed it, the IRS has since delayed our tax filing deadline. The new deadline is May 17th. This delay follows continued disruption from the pandemic and a late start to tax filing season, which the IRS delayed to start on February 12th. It also follows the agency's decision to postpone the deadline to June 15th for the states of Louisiana, Oklahoma, and Texas, who are still recovering from disastrous winter storm activity. Other states may now extend their local filing and payment deadlines. Please note, however, that this relief does not apply to estimated tax payments that are due on April 15th. These payments are still due on April 15th. Now, while this extension was not unexpected, it may be welcome to many still coping with what is becoming one of the most complicated tax seasons in decades. If you need help getting ready for your tax filing, you can go and get our tax guide online for free at our Facebook page. Just go to facebook.com/invest with CCG. Scroll down. You can see I've pinned it here to the top of our page. If you're not on Facebook, shoot me an email and I'd be happy to send you a copy of that. Okay, secondly, tomorrow morning, we have our next economic outlook with our Chief Investment Officer, Tom Fox. This is an opportunity for you to hear from both myself and Tom as we discuss the positives in the economy, potential headwinds, as well as our outlook for the rest of 2021 and beyond. If you have questions about what's going on in the markets or the economy, you can email me a question today, and I'll have that teed up for Tom tomorrow, or you're welcome to join the Zoom call, and we'll have the chat box open on that Zoom call. Just go to our website. You can find it at investwithccg.com/events. Right here at the top, our economic outlook. Click on that, and it will take you to the RSVP page where you can join the Zoom call and be able to ask your questions live right on there. Okay, so find my mouse here. Okay, so with that, I am going to go ahead and roll the intro, and then we will get into this week's economic update. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. Okay, so in this week's recap, weakness in tech and high growth stocks leads to a rocky week, while Yellen and Powell signal optimism. Remember, if you would like me to email you a copy of our full update every Monday, you can subscribe online at our website. In this update is also our financial tip of the week. This week's tip has to do with those of you who may be expecting a child. If you're expecting a child or maybe a grandchild and you'd like to pass on a good financial tip, be sure to check out this week's tip of the week. We also have key economic data that we're watching, as well as companies reporting earnings, our quote of the week, and then a little bit of fun with our weekly riddle. All right, so a rocky week with wide price swings led to mixed results for stocks last week as investors grappled with anxieties over economic growth and weakness in technology and other high growth stocks. The Dow Jones Industrial Average added 1.36%, while the Standard & Poor's 500 gained 1.57%. The NASDAQ Composite Index fell 0.58% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, slipped 1.67%. So let's take a little bit deeper dive into what actually happened last week. So after a promising start to the week, stocks turned negative on mounting concerns about economic growth in Europe, with broad losses in energy, cyclicals, and technology. Though bond yields backed off their highs, and Secretary of the Treasury Janet Yellen and Fed Chair Jerome Powell both struck an optimistic tone on the economy, stocks posted back-to-back losses on Tuesday and Wednesday. Thursday trading was emblematic of the week's volatile action. The S&P 500 dropped nearly 1% earlier in the day, following Powell's comment about the Fed eventually rolling back its bond purchase program, then rallied to close with a 0.5% gain on the day. Stocks rallied into the Friday close, pushing the Dow and S&P 500 into positive territory and paring the losses on the NASDAQ Composite. Let's take a little bit closer look at technology. So the losses in technology and other high growth stocks in recent weeks have largely been attributed to the sharp and rapid rise in bond yields. So it was both interesting and a little bit confounding that last week saw yields pull back, and rather than helping support these companies' stock prices, many technology stocks continued to decline. The failure to rally on lower yields may be pointing to other reasons for their price weakness. Some are concerned about current prices and believe there may be better growth opportunities in more fairly valued companies. The fear of missing out, or FOMO, that propelled investors to pile into these stocks over the last 12 months appears to have moderated. All right, and then lastly, I want to talk a little bit for a few minutes about investing during periods of inflation. So what does inflation mean for your investments? Well, in August of 2020, the Fed announced that it is willing to allow inflation to run higher than normal in order to support the labor market and broader economy. This major policy shift allows inflation to run above the Fed's 2% goal for some time before the Fed would consider increasing short-term interest rates in an attempt to combat higher prices. These robust changes in the Fed's long-standing inflation policy further illustrates the importance of understanding how inflation is reported and how it can affect your investments. So, what is inflation? Well, inflation is defined as an upward movement in the average level of prices. Each month, the Bureau of Labor Statistics releases a report called the Consumer Price Index, or CPI, to track these fluctuations. It was developed from detailed expenditure information provided by families and individuals on purchases made in the following categories: food and beverages, housing, apparel, transportation, medical care, recreation, education and communication, and other groups and services. So knowing that, how applicable is the CPI? Well, it's the commonly used indicator of inflation. The CPI has come under some recent scrutiny. For example, the CPI rose 1.4% for the 12 months ending January of this year, a relatively small increase. However, a closer look at the report shows movement in prices on a more detailed level. Used car and truck prices, for example, rose 10% during those same 12 months. As inflation rises and falls, three notable effects are observed. First, inflation reduces the real rate of return on investments. So if an investment earns 6% for a 12-month period and inflation averaged 1.5% over that time, the investment's real rate of return would have been 4.5%. If taxes are considered, the real rate of return may be reduced even further. Second, inflation puts purchasing power at risk. When prices rise, a fixed amount of money has the power to purchase fewer and fewer goods. And then third, inflation can influence the actions of the Federal Reserve. If the Fed wants to control inflation, it has various methods for reducing the amount of money in circulation. Hypothetically, a smaller supply of money would lead to less spending, which may lead to lower prices and lower inflation. If you are not currently working with a trusted financial professional, you may want to consider that as an option. When inflation is low, it's easy to overlook how rising prices are affecting a household budget. On the other hand, when inflation trends higher, it may be tempting to make more sweeping changes in response to increasing prices. The best approach may be to reach out to a financial professional to help you develop an investment strategy that takes both possible scenarios into account. All right, like I said, we had a lot to catch up on today. With that, I'm going to sign off. There is a lot more in this week's full update. If you'd like that full report, head on over to our website, subscribe, and I'll look for you next week. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.